Okay, so we calculated all the amounts for 3.1, which was the depreciation calculations, and we're moving on to the balance sheet. I'm going to try to do this slowly. I'll try my best, but sometimes I forget and I lose track, but I'm going to try. Okay, so we have, if you know, and you should know which items go under non-current assets, which items go under current liabilities, you can write it down like trade and other payables, blah, 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 blah. But sometimes there may not be an item and then you have to, delete it and it looks ugly. So I don't do that. Let's read out information. So assets, non-current assets. Well, we know we have fixed assets because we just calculated it. And we also know which amount goes here because once again, we calculated it. Don't forget that the fixed asset amount that goes here is your total carrying value. And it's right here. So that's our fixed asset amount. I don't think we need any more calculations. You can just write it in there and boom. Okay, so let's go back to our question to see what else we're working with. We have capital, retained income, fixed assets, loan. So, okay, we know that loan is a liability. Trading stock, debtors, fixed deposit. Okay, the fixed deposit is also a non-current asset, but we don't have an amount yet. So we can just write in fixed deposit. They have already filled in all the details for current assets for us. We just need to do the calculations. Okay, I'm going to start reading the additional details. So inventory, we don't need trading stock here because they have the amount for us. Let's start with trade and let's see. Okay, so net trade debtors. We have 67,200 and we know that trade debtors goes right here, 67,200. I hope you can see that. Let me make it bigger, just in case. So we have 67,200. Your debtors control always goes under trade and other receivables, okay? What else? We have bank, which is favorable, but we don't know the amount. Ooh, we're gonna have income tax. We have creditors control, and creditors control we know goes under trade and other payables. Let's quickly write that down. Trade and other payables, and in brackets, that was 184,000. Okay, very good. So this stuff is easy. Let's get started on the, can we call these adjustments, which is what they're really testing. Okay, so see, we have the electricity account for February 2017 was still outstanding. So for 1 month, we didn't pay electricity. That means it's an accrued expense. Accrued expense is a payable. And we need to add this. So we need to add this amount to trade and other payables. So plus 5,600. Okay, because once again, this is an accrued expense. Okay, moving to D. D is about provision for bad debts. And it says it must be increased by 270. Okay, so we know that our debtors control is under trade and other receivables. That's our debtors control right there. And now we want to increase our provision for bad debts. By increasing our provision, we are decreasing our debtors. Because we know that there's going to be more bad debts, which means, more debtors aren't going to pay us and they no longer owe us this amount. So we have to subtract that.